Markets back to oversold conditions. Is a bounce likely? Let's talk about that today on 3 Minutes of Markets and Money. A couple of weeks ago, we were talking about how the market had gotten back to very overbought conditions after that low that was put in on very oversold conditions. Now, markets back on a sell signal, getting back here to fairly oversold conditions, suggestive that we could actually see a bounce. Markets are set to open up a little bit this morning, and that wouldn't be surprising here. Now, this is coming on the heels of the hottest inflation print since 1981, but again, markets are just back to oversold condition, working to try to hold this support at the 50-day moving average. Now, importantly, it's not just the S&P that's doing this. The S&P's been in a consolidation pattern now for about 6 months, really have not gone much of anywhere. However, other markets are doing markedly worse. For instance, international markets continue into a very negative downtrend at this point in time. Again, trying to get back above the 50-day moving average, recently failed, have now gone back below that, still on a sell signal. They are oversold just like the S&P, but again, the trend of international stocks continues to be markedly worse than that of domestic stocks. Emerging markets have been a terrible set of performing stocks this year, continuing its long-term decline and underperformance since last year. But of course, emerging markets and international have been underperforming the S&P since 2009. So again, this recent spat of underperformance, not surprising. Emerging markets did rally to the 50-day moving average, failed that test of the 50-day moving average, now looking to retrace back down towards lows that we saw earlier this year. Again, just triggering a sell signal. They are oversold here on a short-term basis, so we might see a little bit of support here momentarily, but with the sell signal just now triggering, I would expect a retest of lows on emerging markets. Again, we have recommended remaining out of international and emerging market stocks, really for the last year or so. They really haven't provided the opportunity to put capital to work at this point, so we've been remaining more domestically focused. But we've also been more focused on large cap stocks because small and mid caps continue to underperform as well. Let's look at those stocks. Taking a look at small caps as an example, on a sell signal, they are oversold. Again, the performance this year in particular has been markedly worse than that of domestic stocks, but this underperformance really kind of goes all the way back to 2021. As we began to see in early 21, we saw small caps actually peak, and that underperformance has continued. Again, small caps haven't really gone anywhere now for months, but that lack of performance going back to last year has really impaired portfolios that are trying to run a more diversified allocation. Mid caps look much the same way. Not surprisingly, there's very little difference between the small cap and mid cap indexes. Again, on a sell signal, very oversold, lack of performance there. Again, underperforming domestic stocks. This is going to become much more challenging for these stocks as we move forward this year because of high inflation, rising interest rates, lack of new orders. This is going to begin to really weigh on their prospects for earnings growth and support in those markets as well as the economy begins to slow down. Small caps, mid caps tend to be better performers in early stages of a recovery. They tend to be worse performers in a late stage economic cycle, which we are getting into as we speak. So watch your allocation right now. Again, we remain more domestically focused, large cap focused right now for more of a safety dividend income play and more defensively positioned than growth. But that's going to change as we get later into this year, begin to see those deflationary pressures come in. We're going to want to start to shift our exposures from defense to growth, particularly into companies that can grow earnings in a much slower economic environment. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you tomorrow.